Now that we have a solid understanding of market structure, market direction, and a basic understanding of how to map supply and demand zones, the next logical point to focus on is who is in control. So determining who is in control is going to provide us with a better understanding of order flow and market direction. When levels of demand are held while supply levels are failing, we can denote that demand is in control. When levels of supply are holding while demand levels are failing, supply is in control. So to determine who is in control, you have to determine whether supply or demand is failing while the other side is holding. So there are three scenarios that we can take a look at to develop this. So let's look at demand overpowering supply. Demand being in control and supply levels failing while demand levels are holding. So before we even get into the supply and demand order flow component, we can see that the market is creating higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. We're in a bullish market structural trend. We're creating bullish structural ranges, and we're anticipating that price will go higher. If we take this a step further and start mapping in supply and demand zones, what we can see is that we form supply zones at the higher highs and demand zones at the higher lows. And if our expectation is that price is going to continue higher, what we are going to start seeing is that supply levels are going to fail as the market trades higher, breaking past the continuation point high of the bullish structural range, forming a new higher high. And when price enters that pullback phase and starts trading back to form a higher low, it's going to tap into a level of demand. So what we're seeing is supply failing and demand holding control. We're seeing supply failing, demand holding control. When supply fails, we see a higher high forming in the market. And when we see demand getting interacted with, we're creating that higher low and continuing the trend. So we have our impulsive phase forming our higher high, forming supply. We have our pullback phase that forms our higher low. We have our impulsive phase that forms our higher high, causing supply to fail. And we have our pullback phase that pulls back into demand, forming our higher low. Price then enters our impulsive phase, and this continues on and on until something changes in the market and we see a market reversal. But first, we would need to see a change in character. Now let's talk about supply overpowering demand. So in this case, supply is in control. Demand levels are failing while supply levels are holding. And again, what we'll look at first is the fact that we are creating lower lows and lower highs, lower lows, lower highs, lower lows, and lower highs. We're creating those bearish structural ranges where we have continuation point low, invalidation point high, continuation point low, invalidation point high, continuation point low, invalidation point high. Now, if we take it a step further, and when we create our lower lows, demand is forming, and we create our lower highs, supply is forming. So when we enter that impulsive phase, forming that lower low, that demand forms. We enter the pullback phase, that creates our lower high, supply forms. And when we enter that impulsive phase, we see that demand fails and we form a new lower low that forms a new demand zone. Price then enters a pullback phase, moves counter trend. We tap into supply, form our lower high, and continue moving down, entering a new impulsive phase, causing demand to fail once more, forming a new lower low and a new demand zone. Price enters that pullback phase once more. We pull back into supply. Supply takes control. We form that lower high, enter a new impulsive phase, and price continues to the downside, causing demand to fail. So what we can see is that demand levels are failing and supply is taking control. So we can say that supply is in control and we are in a bearish trend. And the previous example was that demand was in control, supply levels were failing, and we are in a bullish trend. And you can probably see the importance of supply and demand being stacked onto market structure and understanding and providing more context to the market direction overall. So we talked about a bullish market structure and we added on demand levels showing that demand was in control and supply was failing. We've seen a bearish market example where demand was failing and supply was in control with bearish market structure. Now, the final one we have to talk about is that neither side is in control. So this is supply and demand are essentially fighting for control. The market is likely ranging or moving sideways, and at this point, no one is in control. So if we look at this, we can see that, we're coming down, we create a low, demand is created, we create a new lower high, supply is created, price moves to the downside, breaking demands, we're seeing demand fail, a new demand zone is formed, price moves to the upside, creating a higher high, so which means supply has failed, a new supply zone is created, price moves to the downside, demand is respected and held, price moves to the upside, supply is also respected, and we start to see a push down, creates a new, what looks to be a higher low, price moves to the upside, supply starts to fail, price then moves to the downside. We see demand fail on this low, demand fail on this low, a new lower low is formed in the market. See price moves to the upside, forms supply, price moves down, respects demand, price moves to the upside, respects supply, moves down, demand fails, price moves to the upside, supply fails, supply fails. So in this entire example, we can see that price is basically just moving sideways. No one is in control. And if we take it even a step further, we don't necessarily have any true market structure or market direction to work with. But this shows the importance of identifying who is in control and how it links to market structure. If you can understand the overall market structure and add on who is in control with supply and demand, you'll have such a powerful ability to truly understand the market direction and where the market is heading by combining the two.